Hey guys, this is Scott Horne with the Owner Finance Network. In this video, we're going to take just a short minute and talk about lease options and rights of first refusal and various things that you can blend into contracts when you're looking at either buying or selling a property. So first off, a lease with an option to buy gives you the right to buy a home subject to certain terms contained in that contract today, whether you buy it a month from now, 6 months from now, a year from now, whatever it might be. And when you're buying a home as a non-owner occupied property, there really aren't any rules or regulations. It's pretty much whatever you and the seller negotiate. Now, here in the Texas marketplace, the problem is when you're selling it to a consumer, i.e. a home buyer, now our property code takes over. There's all sorts of issues. Let me point out, that is in Texas. This is not in other states. Most states have a lot more loosey-goosey rules, nothing nearly like we have here in Texas. But in Texas, our primary rule is a lease with an option to buy, wherein title is not delivered within 180 days or 6 months, becomes an executory contract, which we call here in Texas a contract for deed. Some states call that a land contract. It just slipped my mind what they call it in Arizona. I'll pick it up here in a minute. But same thing, only different, as we say. And here in Texas, we do not want this to become an executory contract because all sorts of other rules and regulations kick in that we just don't sell homes to owner occupants using contract for deeds or executory contracts in Texas if we can avoid that completely. What do you do? When do you do this? Why do you do this? You know, buying a home, I get it. The seller is looking for a way to get cashed out. You might need some time to do a few things, so the lease option may work well. Now, I like to inform the seller how quick they can take the house back from an investor through a traditional foreclosure. Because so often when we're buying homes from a seller, that seller is in some kind of distress. Who knows what could hit them? A federal tax lien, a judgment lien, this, that could affect the property that they could not contend with, meaning you may wind up having to buy that lien, deal with it, and pay it off in some fashion. And if you've already committed to a buyer to do something, and you can't meet their obligations, you could get sued for damages from that buyer as well. So I always find it better to control the transaction through a seller finance arrangement, informing that seller how quick, at least here in Texas, they get that home back. Other states it might be different, I get it, and find the best way to negotiate that deal. Now, with a back-end home buyer, most of the time investors want to use a lease option because they want their buyer to cash out of the deal. Now, by the way, guys, you're going to get a much smaller option fee than you would a down payment fee of that buyer. So how would you structure a deal with a back-end buyer that may help you out along the way accomplish the same goals? What I prefer is to sell the home to the consumer, at least here in Texas, with a seller finance arrangement because I can capture a much larger down payment than I can an option fee. I get more money in my pocket today. I like that. Next, if my true goal is to help that buyer refinance the home or sell it 2 years down the road, 3 years, 5 years, whatever it might be, I use a step-up mortgage, meaning I'm increasing my interest rate every year to a point where you're really putting that buyer in a position that they are paying you enough money you don't care, or you're forcing them in a position to refinance or sell the house or give it back to you. Anyway, you keep that down payment and you move on down the line, similar to a lease option out there. So understanding some basic nuances like that, I think, are so important. Also, when you have a mortgage with the buyer, having that pay history that that buyer is creating through a loan servicer helps that buyer truly refinance the property. It is easier for a buyer to refi a home than it is to get a purchase money mortgage. Again, understanding of that tells you why you should be going with a owner finance transaction versus that lease option also along the way. Now, when you're selling a home to a back-end buyer, you know, I've seen some people talk about using a right of first refusal where they say, hey, I've done a lot of work to this house, and if you were to decide to sell it, I'd like the right of first refusal to be able to buy that home. Now, could you negotiate a price to buy it back at in the future? Maybe, is the simple answer. Or could you buy it back at whatever price they've negotiated to sell to a third party? The answer is, again, maybe. Maybe you have a reason you want to do that versus not doing it. Maybe you have financing in place already and you did a wraparound mortgage. So it's easy to navigate that way. Maybe you can pay that buyer $20,000, $30,000 to get the house back because you're able to resell it, get another down payment to offset the money you're out of pocket, maybe sell it for a little bit higher price terms, and keep your transaction running. So there's always a good reason to look at possibly that right of first refusal. Now, if the buyer stays in the house for 20 years and decides to sell it, okay, not going to work as well. But if the buyer is in that home, they want to cash out within 3, 4, 5 years, they have limited equity has been created or built up in the home, maybe it's an opportunity to buy it back very easily without having to deal with them trying to list or sell the home out there. So understanding some basics with options here in Texas or other states, know what those rules and regulations are, know how it works when you're buying the home as an investor versus selling a home to a consumer or a owner occupant. Know those rules and regulations in your state. Again, loan processing. What's the difference? What are my positives and pros and cons versus an owner finance versus the lease option? What's my benefit? End of the day, I believe buying the home and controlling the home from the seller, at least here in Texas, is a big positive. Selling a home to a consumer with owner financing, maybe using a step-up mortgage, as I said, gives you the same exit strategies, actually a better exit strategy than a lease option would to help that buyer refinance and cash out. And as you learn these things and implement them into your strategies, I think you'll find it very beneficial for you along the way. So guys, I hope you found this video helpful. If you did, take a minute and like it. Don't forget to join our YouTube channel. Comment below. We'll do our very best to answer them for you. And guys, we'll see y'all next time.